Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 15th through January 19th, where, among other things, we'll be discussing how to make money trading Bitcoin ETFs approval. So thank you for joining us, Alan Krantz, Brian Moritz. Hope you all are doing well. See, Ellen says he's got 3 feet of snow. I'm not sure exactly where you are. I don't miss that a bit. I grew up in Michigan and had to dig the car out 3 times a day. I don't miss that a bit. So here's our notes for our weekly trading game plan for the trading week of January 15th through the 19th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. We store all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks. Our notes contain links to bonus videos, all the tools and resources we use for our market analysis, our trading strategies, trade ideas, etc. So first we'll take a look at how the markets ended up on Friday in the main page in FinBiz. So we can see the markets were generally pretty flat all of Friday, just kind of oscillated, started up a little bit, dipped down a little bit. Dow ended up negative 0.3%. NASDAQ eked out a 0.02% positive, and the S&P a 0.08 positive. So again, pretty flat, just kind of oscillating during the day. We had 52% advancers, 43% decliners. We got 80% new highs, 19% new lows. We've got almost 74% still above their 52-day or 50-day moving average, and 65% above their 200-day moving average, 34% below. So this shows bullish, but again, it was generally pretty flat. The heat map, we see Microsoft was positive, Tesla very negative, Amazon a little negative, UNH negative. The financials, we'll talk about earnings again, and the major banks, their earnings were a little disappointing, so we didn't get that pop in the financial sector that we were potentially looking for an opportunity in. You see Google and Meta. So again, it was mostly a rotation back into the Magnificent Seven, with the exception of Tesla or the old FANGs, the mega cap techs. Energy was positive. We'll talk about the pop in oil. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So we get some of the news. They're talking about EV winter, impact on Tesla. Also, you saw Hertz was reducing their fleet of EV vehicles. We've got the airstrikes in Yemen on the Houthis and the impact of that on oil, gold, and silver. We're going to talk about the Bitcoin ETFs and their opportunities. Again, with those airstrikes in Yemen, we saw a brief pop in oil, popped up over 75. Didn't hold those gains for very long. We also saw an uptrend in natural gas. So we'll see. I think it tested almost near 350. Looks like it's retreating a little bit, but a nice uptrend in natural gas. Also, with those airstrikes, we saw pops in gold and silver. We'll see that in the futures. We can see the Indices futures are all pointing down a little bit. The Treasuries had gone up over 4% on the mixed inflationary data. We'll talk about the CPI and the PPI data we got this week and their impact on Treasury yields, but we can see they retreated generally down below 4% again. Dollar strength, so dollar's been kind of hovering, DXY has been kind of hovering, oscillating around 102, not a lot of movement. We'll see a lot of flatness in many of the futures. Welcome Easy Mike, Douglas PC, MD, thank you all for joining us today. Hope you all are doing well. So let's look at how the indices did for the week. Again, we see the SPYs testing that all-time high. I believe it briefly broke its high during the week. So again, very topping action. We've got this very narrowing wedge. So again, very topping action there. Plenty of room above the moving average. If we zoom out a little bit, again, we see, a new all-time high for the week. After that, brief correction, again, plenty of room above the moving averages, in my humble opinion. Again, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. But in my opinion, as we'll see in all the indices, they just seem to be topping, and I think we're going to see a lot of chop along that top and not a lot of trending movement. But again, that's my opinion. We'll see that again in the Qs, very similar. It didn't quite make a new all-time high, but we had that correction. Now it's pushing up a little bit. I expect it to test that high and then get rejected again, because again, I don't see a whole lot of catalyst to push the indices higher anytime soon. Very similarly on the Dow, very flat, very choppy. Dow, could be vulnerable to a significant correction. It looks like a, pretty exuberant run there. Let's go back to the NASDAQ. It had a little bit more of a correction. S&P similar, again, pretty exuberant run. So, we could get a more significant correction at some point, particularly with some of the global instability. IWM, not so. We had an exuberant run. It's still in correction mode, so it looks like it's still downtrending. It did break the previous support from the previous high, so it looks like we're in a downtrend on the Russell. The VIX, even though we had that, global instability, etc., we got the inflationary data from the CPI and PPI, got just a very brief pop in the VIX up to, in the VIX futures up to 16, but it very quickly is retracing back down to, the futures is showing 13. I believe the actual VIX is down in the 12s again. So again, VIX just really hasn't been able to hold any kind of pop, shows there isn't a whole lot of real fear in the market. Look at the groups and sectors. Grab a quick drink. Easy Mike says it's all Bitcoin, energy, and biotech. And again, we'll be talking about Bitcoin, and we'll look at energy, and we'll also talk about biotech, probably more so tomorrow. Welcome to Ricky Khan. Thank you for joining us. So again, on Friday, as Easy Mike pointed out, we saw that, strong rotation into energy, some into real estate on the retracement in the bond yields, utilities, a little bit of a flight to safety, a rotation out of consumer cyclicals and financials, and some probably profit taking in healthcare. Healthcare had a pretty good run. Technology pretty flat. For the week, however, technology, communication services. So again, your Magnificent Seven, your mega cap techs were the winners for the week, and then we got some defensives. Big loser for the week was energy and utilities. So again, we saw that rotation on Friday into energy. For the month, healthcare has been strong. We've been talking about healthcare, biotech, real estate, energy, pretty strong. The weakest were utilities and industrials, but for the month, everybody's been positive. As we get towards the end of the month, we'll talk about the January barometer and how that might indicate how the markets will perform this year. We look at the industries for Friday. Uranium's been very strong. Again, that pop up in oil. Also, I guess there's talk of restrictions on uranium coming out of Russia, so less supply. So uranium's been very strong. Silver and gold had a pop. Again, I think it's been part on those airstrikes. Again, some of the REITs, oil and gas strong, energy in general. Weakest airlines had some poor guidance. So again, we're talking about earnings and how it's important to listen not only to their bottom line earning report, but also their guidance going forward. So that had a negative impact on airlines and travel services. Also, we had the Boeing incident with the door blowing out of a Boeing. That's going to negatively impact Boeing and some air travel. So again, uranium been very strong, NVIDIA primarily, semiconductors very strong, technology in general for the week. For the weakest, we've again got airlines, got some coal, some oil mixture, some profit taking probably in the healthcare segment. Again, for the month, energy's been generally strong, uranium's strong, biotech's been strong. The weakest for the month, again, some retail, again, airlines. Okay, so I'll open up the economic calendar and investing.com. We'll talk about some of the highlights, some of my notes, and then we'll look at the economic calendar going forward for next week. Just a real quick reminder, as quickly as I can, the important economic data, I will capture that and post it in our Surf the Markets channel in our Discord. So you can see here's the PPI data, CPI data Thursday and Friday. So I'll capture that data, post it in the Surf the Markets channel in our Discord. Our Discord is free to join. We would encourage you all to join our Discord. Again, we can have these discussions about anything related to trading of any asset class, different types of trading, etc. in our Discord 24/7. And again, you'll get reporting of the important economic data as soon as I can post it there. So last week, not a whole lot, Monday through Wednesday. Then Thursday, we got both jobless claims data and the CPI data. The CPI data, or the Consumer Price Index data, came out a little bit hotter than expected, both on a core of 3.9 versus expected 3.8 year on year, and month on month was 0.3 versus 0.2 expected. And the main CPI was 3.4 versus 3.2 expected. And again, 0.3 versus 0.2 expected. So again, consumer inflation was a little bit hotter than expected. Again, negative reaction in the market. It takes off the table any near-term rate cuts by the Fed. Continuing jobless claims lower than expected, so people are finding jobs. Initial claims was lower than expected. The average is lower than expected. So again, the job market continues to be resilient, so the Fed doesn't have to worry about the job market. And real earnings was dropped from the previous, so the wage inflation, that's a positive in terms of inflation and less risk of wage inflation. Friday we got PPI, so front end producer price index. So the front end of the supply chain came out better than expected. So we got very mixed messages on the consumer side. Inflation's still higher than expected, but on the producer side, it's a little bit lower than expected, at least for December. Again, in my humble opinion, this was December CPI data. I don't find that terribly surprising. I think retailers, people selling to consumers probably jacked their prices up a little bit in December for the holidays. So I think that might drop down again in January, although, again, oil prices affect the base CPI number, but not the core. They take out energy out of core. So the PPI data, again, it still shows inflation is cooling very slowly. I almost titled this video something about the inflation smoldering. So, in my opinion, I think inflation is still smoldering. There's still a risk, and I think that will keep the Fed on hold and not cut anytime soon. Next week, just a reminder, markets are closed on Monday in observance of Martin Luther King Jr. Day, and Friday is options expiration for January. I'll jump over to investing.com. We can look at any other economic data I might have missed, and we'll look at the economic data coming up for next week. Let me grab a quick drink. Okay, we still got Fed speakers talking, and you'll hear their opinions as to, inflation cuts, etc. Cause, a little bit of volatility in the market as these different opinions hit the market. Bond auctions seem to be not too bad. Trade imbalance, better than expected. Crude oil stocks dropped more than expected, but I think, again, the Gulf War issues are more impactful than the supply demand. And one of the reasons that was noted that the price retraced after it popped up over 75 on those airstrikes was that it's not actually impacting the overall global supply yet. Mortgage rates up a little bit, applications down. So here, crude oil inventories got to build, so a little conflicting data there. Talked about CPI data. We talked about jobless claims data. Again, bond auctions not too bad. Where's the natural gas? Because the natural gas was interesting, and then we had an uptrend in natural gas. There's the natural gas storage was down significantly more than expected. And then again, we've got that uptrend we'll see in natural gas. We talked about PPI data, Baker Hughes. So again, rig count's dropping. So they're stabilizing the price. The trend in oil rigs and rig count is down. So again, stabilizing the oil price, stabilizing supply. Okay, economic data for next week. Again, we still got Fed speakers talking. We've got bond auctions, mortgage data, typical mortgage data. Retail sales for December. That will be interesting to hear how the retailers did in the holidays. Preliminary data I've heard thus far is they had record sales in terms of dollar amounts. Something to listen to in their reporting, etc., is how much discounting did they do. Again, I expect record sales in dollar amounts, but if they had to discount, then that would be negative from an earnings standpoint. Industrial production, I expect it to show the economy continuing to slow. Typical oil and natural gas data, building permit data, so housing, how's the housing sector? You'll get typical jobless claims data on Thursday. And we get more housing data, and then we get Michigan sentiment data. And again, the past couple months, this has been more significant than sometimes in the past. We'll have to see if the consumer is still expecting inflation that's significantly higher than the Fed's 2% target. That could cause some volatility again. And then we've started into earnings season. So Friday we had a number of the big banks reporting earnings. Again, they were somewhat disappointing. Um, Even though I think J.P. Morgan reported a record, they took an impairment charge. Several of these banks took impairment charges from the FDIC due to the bank collapse earlier in 2023. So again, that's negatively impacting bank earnings. So the financial sector didn't really get the pop on the big banks that I thought might occur. And now it looked like the financial sector is downtrending. So we're just in the start of earnings season. So I'll let you see if there's anyone reporting that might be significant for your portfolio, your trading. So there's Morgan Stanley, Goldman Sachs. So Tuesday we got some more. Then we've got some more banks. So the banks tend to be the early reporters. And then I believe into next week or so we'll start to get into the Magnificent Seven, etc. So again, the earnings are important, not only their earnings, but also their guidance. We saw Delta reported a great Q4 earnings, but they guided down and then took a hit. So again, earnings matter. You can listen to our video on how we trade around earnings. We've got the link in the notes. You can also find that video on our BeachBum Trading YouTube channel. And then we've got the next FOMC meeting on January 30th, 31st. Okay, so I'll jump over to the Webull screen. We'll look at the market screen in Webull. I believe Bank of America, Easy Mike is asking if Bank of America reported. I believe they did. I don't think it was good, but I don't think it was terrible. Again, the major banks, they didn't really, I expected them to beat better than they did. Again, these impairment charges, Wells Fargo took an impairment, JP Morgan took an impairment. So I think that's going to drag on the financial sector in general. And then we've got the risk in the regional banks. So I think it's generally going to be a downturn on the financial sector. So let me grab a drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 75 free fractional shares of stock if you open and fund your account with 25K or more. If you fund it under 25K, you get 30 free fractional shares, each of which is worth $3,000 to $3,000. You can see we use Webull for our market analysis, our due diligence, the majority of our trading. And if you join with our affiliate link in the description box below, you'll get your free fractional shares of stock and also help support our BeachBum trading community, which we greatly appreciate. Welcome, Marve. Thank you for joining us. Good to see you. So here's the market screen for the online browser version of Webull. Find this useful for market analysis. Again, the histogram's useful. It shows us a distribution of the advancers and decliners. Again, we can kind of see it was a tug of war on Friday. Small advancements, small decliners, a few more decliners and advancers. Again, as we've seen for the past several weeks, we've seen an outflow out of the NASDAQ on Friday, sharp inflow into the NYSE on Friday. So again, this has been a trend we've seen for several weeks. Probably profit taking again out of the tech sector, out of the Magnificent Seven on Fridays. Again, you can see a near-term earnings calendar here in the calendar section in the Webull's market screen, so you can see who's got earnings upcoming in the near term. So we'll look at the best performing industries for the week. So uranium, by far the best performer for the week. Semiconductors pretty good. Retail, IT, home building not too bad. Healthcare again pretty good. Retail, biotech, pharmaceuticals. So again, you can see this healthcare theme. Healthcare, energy, again, as Easy Mike pointed out. Look at ETFs. So India positive, down on the Dow, and down on the Dow. Like a S&P bond fund or something, QLD. So again, dividend payer on the Qs, up on the Q, up on the Q. BITI, so that's the old short on Bitcoin. Up on the VIX, so we've got some upward volatility on the VIX. Short the Russell, short small cap. Industry-wide, uranium again is the strongest. Shipping, healthcare, energy very positive. Real estate had a recovery. Again, these are from Friday, so utilities, technology pretty mixed. Basic materials somewhat. Again, mostly uranium. Consumer defensive. Staples. Commodities, natural gas. Those two are both natural gas and natural gas. That must be a gold. Okay, so we'll also look at the futures in FinBiz. So again, here as well, in the futures, you can see all the indices, how this topping action. So again, I really think we're just going to be in for a chop, at least for the foreseeable future. I think the indices will be, testing those previous highs. I don't see, anything that's going to cause a major run through those highs. So I expect they're probably going to, test those previous highs, get rejected, and then bounce back up. So I think the environment in general is going to be much better for short-term swing traders, scalpers, day traders, etc. Than for any kind of long-term swing trading. This type of environment, frankly, is not the greatest for my style of swing trading or positional type trading. So again, I would be focused on if you're nimble enough on short-term scalps, if you can take advantage of the momentum trends. So momentum traders, you can see like in the NASDAQ, it trended down for several days and up for several days. Probably going to test and reject, and then we'll get some momentum in the other way. And the Russell looks a little more vulnerable here. See a nice run in the Nikkei, although it's got plenty of room to continue to run. Europe is pretty stagnant, pretty flat. DAX pretty flat. Again, we saw that little bit of a pop in the VIX, but not significant. Again, we saw that pop in oil on the airstrikes, just breached 75, got rejected pretty quickly. Now it looks like it's downtrending again. So it's been pretty range bound between 70 and 75 recently. So unless we get a reduction in supply coming out of the Gulf War situation, I expect continued chop. Again, there's plenty of opportunities for short-term trading, and we'll look at the oil ETFs. Although natural gas, you can see that, very steep. It looks like almost a parabolic uptrend. So plenty of momentum. So I would expect that to continue. We'll see if it breaches 350, breaks the previous high. And if so, it could go significantly higher. So we've been long oil for a long time, which is the leveraged ETF on natural gas long. So the short is cold, KOLD. So again, daily opportunities, a lot of volatility in natural gas. Gold, again, it was downtrending. Then we got that pop again on the airstrike. So looks like it might be hovering around 2050 again. You see it tested 2100, downtrended, got rejected again, was headed back down to 2000. Then we got the airstrikes, caused a pop. Silver briefly breached below 23 and then popped on those airstrikes. Again, I think a lot more upside in silver. We'll watch for palladium. You see these long runs up and down. We'll see if we test that bottom again. If so, that might be a nice. The only ETF though on palladium is PAL, and I've had difficulty. It's a low float, very choppy ETF, but I might have to take a shot at that. Corn, see a big downtrend. Although again, the risk reward on the corn ETF isn't all that exciting, and we'll look at that. Looks like wheat's downtrending again. We're waiting for it to, find a bottom. And then we see the bonds, recovered. They were downtrending, formed a nice bottom, so that looks like a nice swing opportunity. Probably go back up, maybe make it a slightly new high. Like the 5-year looks like it's, testing its previous high. Again, the dollar's been pretty flat at 102. Okay, so before I'll come back to our ETFs because I've got a number of, I've got a number of them I want to look at that either other people have asked for or that I've identified. So first, I want to make sure we get to our strategies for this week, which is how to make money trading Bitcoin ETFs approval. So let me grab a quick drink and let's go through our trading strategies for this week. Okay, so again, our theme, our strategies for this week are to talk about how to make money trading the Bitcoin ETFs approval. So even though we had the little hack SEC foobar on, Wednesday, we did get the approval of 11 spot ETF, 11 spot Bitcoin ETFs on Thursday. Webull came out with a nice page in an email that explains these Bitcoin ETFs. So you can access that link to the Webull page in our notes. They talk about What is a spot Bitcoin ETF? What makes it attractive? And we'll talk about some other potential benefits of a spot Bitcoin ETF. But they talk about, direct exposure to Bitcoin, regulatory oversight, low fees, convenient portfolio management. What are some of the risks? Volatility. Bitcoin, substantial volatility, costs. There's costs and fees in these Bitcoin ETFs. Security, still a digital asset. Some regulatory uncertainties. So one of the very helpful things I thought in this web page is it lists the 11 different Bitcoin spot Bitcoin ETFs and their fee structure. So I think you'll find this very helpful. If you're interested in these spot Bitcoin ETFs, again, you can see their ticker symbols. They all just started trading. So again, we don't have a lot of history on most of these, but you can see if you're going to hold them for any length of time, you can see the fee structures, and it varies dramatically from Grayscale, their conversion of their trust to a ETF. They're still charging 1.5%. This hash is 0.94, and then the cheapest right now is this BitB at 0.2. ArcBees is at 0.21. So again, you can access this web page via the link in our notes. And again, this fee structure table, I think you'll find that information helpful. I will also post that link. I may have already done so, but we do have a cryptocurrencies channel in our Discord. So if you're yeah, I did. I already posted that, the link to that Webull page also in our cryptocurrencies channel in our Discord. So if you'd like to discuss cryptocurrencies in general, I would recommend that channel, our cryptocurrencies channel in our Discord. So I hope that all helps. Welcome, Becca. Thank you for joining us. Hope you're doing well. So, some of the topics I wanted to talk about how to make money trading the Bitcoin ETFs approval is for us to think about is who's buying these new Bitcoin ETFs. Now in Fidelity and some of your retirement accounts, you can now buy these Bitcoin ETFs, whereas you typically could not buy Bitcoin directly in a traditional retirement account. So those people that might have been interested in buying Bitcoin, but again, if you're trading in a retirement account, they may be buying. Again, I would expect it to be younger people in general. Again, that's a stereotypical generality. But again, your millennials and down, I would expect those are the people that are going to be most interested in buying the Bitcoin ETFs if they're not already buying Bitcoin themselves. And then the next question is, okay, where are they going to take the money from? So again, these are discussion topics, and I'd love to hear your feedback. You can post in the comments to this video in the cryptocurrency channel in our Discord. But again, once we've identified who we think is going to be buying these Bitcoin ETFs, where are they going to take the money out of? And Bitcoin in the past, or cryptocurrencies in the past, had tended to be highly correlated with technology, with the tech stocks. So I'm wondering, are they going to take the money out of the Magnificent Seven and put it in the Bitcoin ETFs? Are they going to take it out of the previous Bitcoin-related ETFs like BITO, Block, etc.? Or are they going to take it out of the mining stocks? Where's the money going to flow out of to flow into these Bitcoin ETFs? And again, we saw significant inflows into these new Bitcoin ETFs. So again, we'll want to watch, where is the money flowing into and where is the money coming out of. So obviously we short, where the money's coming out of, and long where the money's going into. So again, part of the question is, how will this impact the previously existing Bitcoin related ETFs? We'll see. I'll look at these in our ETF sheet. We also saw, a sell the news event. So right after these came out, people expected Bitcoin to pop, and rather it dropped. People, it was a sell the news. They ran Bitcoin up to 47, 48K in advance of the actual approval, and then, they sold off. So there were quite a few, bag holders that bought Bitcoin much higher. It's been in a crypto winter, and so I think we got a lot of profit taking, a lot of selling. So again, something to think about if you're holding the old Bitcoin futures ETFs or things that are invested in the miners and blockchain technology. We might see outflow because the same people that bought those to begin with may be rotating into the new Bitcoin ETF. So again, something to think about. So we've done a couple videos on the various ETFs that were previously available to trade cryptocurrency. So you can hear our evaluation of those previous ETFs. And we've talked about, BITO, BITI, Block, BitX, and you can listen to those. Once these new ETFs get some history behind them, then we can evaluate those new Bitcoin ETFs, better. And we will do so, again, once I get some history and we can do a better evaluation, we'll do that. So other things to think about is how this will impact the previous Bitcoin-related stocks like, your Mara, Riot, your exchanges like Coin. Are people going to take their money out of the miners, or are they going to put their money into the miners based on these new Bitcoin ETFs? So some of the additional benefits of some of these new Bitcoin ETFs that I see is the ability to trade spot Bitcoin in retirement accounts, as I pointed out. Typically, you couldn't buy cryptocurrencies directly in a traditional retirement account, but now you can buy these ETFs. So anybody that really wants to, kind of hold cryptocurrency without actually owning the coins themselves can do so with the new ETFs. And you can do so without having to use a crypto wallet or a crypto exchange. So you don't have to, have the keys in a crypto wallet, have the risk of losing them or getting them stolen, or putting them in an exchange, like, and having the exchange go under, like FTX. So it potentially reduces some of the risk. Although, these ETFs, you're not owning your own coins. So one of the major benefits people see in cryptocurrency is, it's portable from country to country. It's, easier to carry around than gold. So if you're concerned about the collapse of a currency or something like that, again, it doesn't necessarily help you as these ETFs are still part of our U.S. Market. Another benefit I see is you don't have to track and report capital gains on your Bitcoin trades. So in the past, now the IRS was asking you, did you do any cryptocurrency trades? And if so, then you'd have to account for any capital gains on those trades and report that as taxable income. So now with an ETF, typically all of that will be handled by your brokerage. They'll give you a form and it will handle any taxes on your capital gains or losses, or that will be actually handled within the ETF itself. Some of the risks of the new Bitcoin ETFs that I see is Bitcoin and cryptocurrencies trade 24/7, but the ETFs only trade during trading hours. Even though that would be extended hours, you can get, potential large gap ups and gap downs. Now, this isn't all that different from other commodities that are based on futures that trade, 24/7. But again, just be aware that, some of these may gap up or gap down significantly right at market open, whether it be extended hours open at 4 a.m. or at the actual market open at 9:30. So again, you might watch the actual Bitcoin price. Again, they may not perfectly track the Bitcoin spot price, so that's one of the outstanding questions, is how well are they going to actually track the Bitcoin spot price. So again, something you want to maybe pay attention to, and there may be advantages between the different Bitcoin ETFs based on how well they track the spot price. So another thing that Kramer pointed out was he said that these Bitcoin ETFs are not actually ETFs, but they're ETPs, which does make some sense, which is an exchange traded product. So behind them, they have a custodian that's actually holding the Bitcoin. So there is some risk in the custodian for the actual Bitcoin, and there's some counterparty risk again with whoever's holding that Bitcoin. If something happens to them, if they get hacked, etc., then the value of this ETP may not hold. So again, I hope this all helps. I'd love to hear all of your thoughts, additional strategies on how to make money trading the Bitcoin ETF's approval. Again, where do you think the money's going to flow into and out of relative to these new Bitcoin ETFs? How do you think it's going to impact other cryptocurrencies? I know people are already talking about Ethereum ETFs, etc. So love to hear your feedback in the comments in our Discord, etc. On how can we make money trading the Bitcoin ETF's approval. So we do have other videos too about various cryptocurrencies, how you can create a watch list of cryptocurrencies in Webull, etc. So you can view those all in the cryptocurrencies playlist on our channel. So additional strategies, we've been talking about how to make money trading in January, the seasonality effects, best market sectors and industries for January. We've also talked about the January effect, laggards to leaders, etc., and vice versa. And then again, we'll be looking at the market in January and talking about how that might imply for the market for the year. Also, we've got strategies for how to make money trading in the winter. So again, you can access all of those videos via the links in our notes as well as on our BeachBum Trading YouTube channel. So now let me grab a drink and I'll go back and we'll look at our ETFs for various strategies, etc. Look at some people have asked about, and then if you have any others you want to look at, you could throw those up in the chat and I'll try to catch them. Good morning, Sydney. Thank you for joining us from Chicago. So is it cold and snowy in Chicago? Okay, let me open up our ETF Google Sheet. Just a quick reminder, if you'd like access, 24/7 access to our ETFs Google Sheet, as well as our dividend payers and our puts ROIC options strategy Google Sheets, you can get 24/7 access to all of these Google Sheets by joining our Patreon at the All Access or VIP level. As you can see, we identify a potential opportunity in an index or a commodity or a topic, and then we can jump over to our Google Sheet and identify the ETFs that we want to use to benefit from that strategy, be it long, short, etc. So again, that's how we try to capitalize on various trading ideas. So a couple that people have asked for last week. Easy Mike mentioned this WGMI, so I want to look at that in. I've added that to our ETFs Google Sheet of Valkyrie Bitcoin Miners ETF, so we'll take a look at that one. So as you can see, you can very quickly find ETFs, be it whether by ticker symbol or by topic, by just doing a Control F find in our Google Sheet. So here we see at WGMI, so I added the category Bitcoin miners. So you can see it went down significantly on Friday. Again, we saw a sell-off, and you can see all the Bitcoins went down. So BITO, BITX all went down. So again, that sell-off, BITI is the leverage short on Bitcoin. So you can see the risk-reward profile for WGMI. Generally, it's got a pretty, nice risk-reward profile. It's a little high right now. We'll look at it also in FinViz. So we'll go to the profile for WGMI and FinViz. Again, it had a nice run into the ETF approval. So you see a nice run, got rejected off of that upper trend line resistance, downtrended. And again, not right now. It looks like it's, significantly downtrending. It does pay kind of a semi-annual or special dividend, but it's pretty small. It is optionable. So you can see it's got pretty good range. We zoom out on it a little bit. So it's been around for a little while, back at least into 2022. Yeah, it looks like it started probably in 2022. So again, it's got some, pretty nice swings. Still got some potential upside, again, based on Bitcoin prices. So look at the profile for it. Actively managed spun. Bitcoin mining operations. So I would assume we can look at their holdings in a second. I would assume it's your Mara Riots, all your miners. So let's look at their holdings. So you can always access the holdings for an ETF with the ETF database link in the notes column. So we can see it's a proprietary it's active management, proprietary weighting strategy. See the expense ratio is 0.75, so it's, kind of expensive. So you can see, okay, Mara is the number one holding, CleanSpark, Riot. It's got NVIDIA, Hive, Hut. So your typical Bitcoin miners. So you can see again, Mara and CleanSpark are over 10% holding. So again, pretty nice performance, pretty nice risk reward profile in general. Just a little high right now, but you can see it's a 52-week risk reward profile is actually even better than a BITX or BITO. So again, if you want to trade Bitcoin miners, this might be an ETF that you find attractive. So I hope that all helps. Okay, the next one. So again, you can find that it's in our ETF Google Sheet now. We'll use that to track another option for trading Bitcoin miners. ETF. Easy Mike also asked us to look at iPay. iPay is a mobile payments ETF, so I put that in the research sheet so we can take a look at that one. So again, you do a quick find in the research tab. If we didn't add it to our main sheet, but we've done previous research, you can see that research in the research tab of our Google Sheet. So here you can see the risk reward profile of this mobile payments ETF. You can see, it's 52-week. I'll bring up the FinViz profile. Again, there's a FinViz URL column in the research tab. So we can see it's pretty high right now. Had a nice run up from November into January. Looks like it's stalling out a little bit. Got plenty of potential upside, in the past. So its 52-week range isn't very significant, but again, it's got a longer term, plenty of upside longer term. Looks like again it's been around for a while, so you can kind of see the longer term bottom around 35ish, upside into the 70s. So I would expect from a top to bottom, it's pretty good. Almost 5, but 52-week it hasn't moved a whole lot. And again, right now, it's more risk than reward right now. Pays a very small dividend, is optionable. See its definition: total return performance of the Prime Mobile Payments Index, providing payment processing providers applications, payment solutions, payment industry, infrastructure, credit cards. So we can look at their holdings. So it's a tiered weighting, vanilla strategy. Look at their holdings. So number one's American Express, Fiserv, MasterCard, Visa, then PayPal, Square. So, their top holdings are credit cards. Next is your traditional payment processors. And then we get into some others, Global Payment Networks, etc., Discover. So again, you can quickly and easily access those via the links in the research tab. So again, I hope that all helps. We'll keep it in here in the research tab for now. Again, the near-term risk-reward profile isn't anything I'd want to chase right now, as again, it's relatively high right now. If it comes back down, again, we can always see if the risk-reward profile improves, and we can always move it up to our ETFs Google Sheet at that time. So again, I hope that helps. Got a couple others to look at. I added one. I found this healthcare short ETF called RXD. So it's ProShares Ultra Short Healthcare. So it's a 2x leverage short on healthcare, as I thought, if we got an overly exuberant run in the healthcare sector, which we've kind of seen, I was looking for a way to short the healthcare sector. So I was able to find this one 2x leveraged healthcare short, RXD. So you can see the risk reward profile of it. It's not all that great in the short term, 1.3. Right now, the risk reward's, pretty balanced. It's actually pretty high right now. We'll look at both their profile and their in both FinBiz and the ETF database in a second. So you see it's way down, which means the healthcare sector is way up right now. You see it does pay a small dividend. It is optionable. It's got halfway decent upside, but again, not a whole lot of range, 52-week range. Longer term, you can see it's got more upside. You can also see it's kind of, low float, choppy. And again, that's the inverse of the S&P healthcare sector. So you can track the sectors. Again, just a reminder, we have a sectors tab. So here's the healthcare sector. So we can see healthcare sector was down. So this should have been up a little bit on Friday. So it was up a little bit on Friday. Again, if we want to look at constituents for RXD, I got the wrong link. Again, it's going to be just a short on the healthcare sector. So yeah, it's a short. So it's going to be an inverse of the X, like the XLB, 2X of the XLB. So I hope that helps. Okay, I'm running a little long. I thank you for everyone sticking with us. I'll keep going for a few minutes. A couple I wanted to look at was lithium. I think someone talked about EVs, Tesla, lithium, etc. There was that article about the EV winter and their impact on Tesla. Also, I want to look at NVDS, which is the short on NVIDIA. We talked about the Bitcoin ETFs. And look at, here's a couple other cryptocurrency ETFs, BITQ and Block. You can see those were also down on Friday. Talked about energy. Talked about oil. So oil, long, we use Gush. Short, we use Boil. It's also or UCO long, SCO short. I saw someone mention they were holding USOI, so that's a monthly dividend payer on oil. Talked about PAL, watching that for a bottom uh, in palladium. We talked about the retail kind of dropping. We'll talk more about the technology sectors tomorrow. We talked about the bounce in silver, so we like AGQ long, ZSL short. Okay, so I wanted to look at lithium real quick. I've been watching these guys to see if they bottom. So it looks like their LIT or BAT is at a 52-week low. So it's 52-week risk rewards, not all that exciting. But again, there's if you're a shorter term trader, looks like both of these are pretty close to their 52-week lows. So those might be an opportunity. Again, if you're looking for a shorter term trade, turnaround in EVs. Again, right now the sentiment in EVs is pretty negative. And then NVDS, we've again seen that big run in NVIDIA. So if you want to short NVIDIA, if you see profit taking in NVIDIA, NVDS. So the long is NVDL. So you can use those two ETFs to trade NVIDIA if you don't want to trade the stock directly. You can see it's NVDL still got some upside. So I would use that to watch, although this is a 1.5 long, this is a 1.25 short, so something we're watching. And again, we'll talk about opportunities with the various technology sectors a little bit more tomorrow. I'll look at the technology sector breakdown more so tomorrow. See also Tesla, you can short Tesla with this TSLS. So again, that had a little bit of a pop as Tesla's downtrending. Okay. If anybody has any other quick tickers you want to look at in our ETF Google Sheet, please let me know in the chat. Again, if you have a question after the fact, you can always post those in the comments in our Discord. Again, you can find our Discord's free to join. You can find an invite to our Discord in the description box below. You can also find links to all of our social media, Twitter/X, etc. You can also find that invite to our Discord in the link section of our homepage, which is beachbumtrading.com, bum without the U. So again, plenty of ways you can contact us, ask us questions. If you'd like us to do research, again, on any kind of ETFs, dividend payer stock, etc., you can put those in the comments in our Discord, contact us via any of our social media sites, and we'll take a look at those. So tomorrow we'll look at dividend payers and also our option strategies, as well as how all of this market analysis input data, how we're going to select our top swing trading stocks to watch for the trading week of January 15th through the 19th. So again, if I missed your stock, please post it in the Discord or in the comments, as I can't always go back all the way in the chat to see comments. I try to go back and capture what I can from the comments if I missed it real time. But again, I can't always go back all the way, so I highly encourage you to put any requests for tickers, etc., questions, comments, feedback for improvement in the comments to the videos or in our Discord, or again, you can contact us via social media. So I would greatly appreciate that, and I'll try to respond to all of them as soon as I'm able. So, and I hope you all will come back tomorrow, same bat time, same bat channel, 10 a.m. Eastern on Sundays for part 2 of our weekly trading game plan for the trading week of January 15th through the 19th, where again we'll be using all of this input data to select our top swing trading stocks to watch, stocks in our bullpen. We'll talk about our shopping list, dividend payers, option strategies, etc. So we hope you like this content. If you'd please smash the like button, help the YouTube algorithm, hopefully share this with other fellow traders. Although we'd prefer if you directly share our content with your fellow traders and friends. That will help us continue to grow our BeachBum trading community. So you can see we've got a great group of traders helping each other out, sharing ideas, both in the chats and in our Discord. And we'd like to continue and grow and improve all of that to add more value for all of our BeachBum traders. So please help us and let us know how we can help you make money trading, help you succeed in your trading career, as that is our objective. So thank you again for watching and for everyone that participated in the live chat. And we hope again to see you all tomorrow for part 2. Thank you and have a great day.